Hey, Chris.
Chris,
Yeah,
were you supposed to be in Germany?
he's got his mic muted.
Oh, right.
He came back.
Chris, if you can hear me, your mic is muted. We can't hear anything you're saying. There you go.
Sorry.
That's okay.
How was your trip?
Well, the trip was Berlin was completely iced in and snowed in. So
Really?
there was more on the way. So we decided to come back early because we didn't want to get trapped there.
Mm-hmm.
So we got back last night.
Oh, short trip then. Okay, why do I look so big? There you go. So what's your granddaughter's name?
Ellie
Ellie? That's cute.
and the 2-year-old is Carla. So those are, I'll tell you, this grandchildren program is a lot of fun. I mean, it's new to me. Really enjoyed it.
I got another one coming in 6 weeks.
Do you really? Good for you.
Daughter, my second daughter.
Good for you.
Mm. You guys see Ralph in the Stroll magazine?
Yes.
Yes,
Yeah, it's very sweet.
it's a nice story.
Very nice. Michelle, you have your hand up? Oh, not anymore.
My video doesn't seem, I can't turn my video on. I can see everything, but for whatever reason, you can't see me. I
Okay.
think, can you hear me?
Yes.
You're fine.
Okay.
Here's Ralph.
Ralph,
Yes.
are you on?
Yes, I am. As I say, my video won't, it does, for some reason, it doesn't recognize the camera that's in my, I haven't changed cameras or anything, but the audio's on.
But I see Ralph.
Yep.
Ralph, we were just talking about how we enjoyed the article on
What's that one?
The one
in
in the Stroll
Stroll.
magazine.
Oh,
Stroll
the
magazine.
stroll. Oh, we're
She's
wondering whether we should have allowed that.
63 years. Wow, Ralph, that's something.
Ralph, did you have to ask which article? I mean, how many articles did you have this month about you?
Oh, that was one of about 10, you know.
Oh, okay. So
Yeah, no
a
big
slow
deal.
a slow month then.
Yeah, that's 1 month's worth. Yeah, next month will be really spectacular.
Okay,
Well,
so
I'm glad you clarified.
We're looking for something from you.
Right, that's right. Well, as a matter of fact, I've been worrying about how to get you know, information out about the Old Goats anniversary this year, 60th anniversary, as you know. And now I can just see the person that I need to talk to is you. You're the guy. Look at this. What a magazine article. Incredible.
Well, I hope you have good images of a bunch of 40-old guys. That's all you'd get.
All right. Okay, we have everybody, so I guess we'll call the meeting to order. It's February 9th, 2026. This is the Capital Budget Committee meeting. Can we get a roll call of everybody present?
Rob Casemeyer, present.
Chris Peich, present.
Kathy Forrest, present.
Chrissy Francona, present.
Ardor Mitzer, present.
And Susan Franklin, present. Okay. So we're starting out in our usual with an update on public safety.
Yeah, we haven't had any meetings. We were converted to a committee. And since that happened, I think they're trying to get the ducks in a row or something. I don't know. So we haven't had any meetings since our last capital budget committee meeting. Nothing to report.
Okay. Well, we do have a few pieces to go along with the discussion that we collected, some internally from the team here. And we also got some information from Linda on the bonding. But we also wanted to find out from you, Michelle, before we talk about the research done within the group on other towns, whether you guys have any information on your benchmarking that you've done.
We don't have anything complete at this time. So the prior committee charged the OPM with having the benchmarking study done.
Mhm.
And unfortunately, I can't report as to where it is today. I'll have to follow up with them and get some information.
Okay, so when you say the prior committee, you're talking about the working group, and
Yep.
now you're an official committee? Okay. Do you, do we as a group want to talk about what our findings were? Do you think it's useful for Michelle to listen in on what our findings have been?
I'd like to hear it.
Sure. I can bring it up on the screen, but I'm not the author of the two. Rob or Ralph, which one of you would like to run the show? I put it up on the screen.
Well, Rob, do you want to go first? Do you want me to go first?
Well, I can just talk a little bit about it. All I did, as I mentioned it, Michelle, was just do a OpenAI search on communities that are in Eastern Massachusetts that are roughly or somewhere around our size, or at least in our region, and what they spent on and how much it was. All of this stuff really should be calibrated by per square foot. And we don't have really any information on the square footage of the the Cohasset activity, or how much it's going to include. So most of these other ones, not all, were on public safety committees, meaning or safety buildings, meaning fire and police. One of them was DPW included, and so on. But some of them are still being worked on, like the one in Pembroke is quite advanced now, even although so it would be interesting to see what the per square footage costs are and how much square footage is needed, versus it gives us versus what Cohasset will have in mind when they put something together.
Sure. So Rob, when I look at this, I just want to make sure that we're comparing, when we're benchmarking with, I guess, like communities, because I've heard of other communities prior to this, and I don't think I've seen many of these listed. So I think we just need to all be on the same page as to what communities we're benchmarking against. This is great. I'm just curious to know, because I know Ralph had mentioned some other communities in the past.
you
Well,
know,
one of the ones he mentioned is Sutton, and that's why it's in there.
Okay.
The other ones we visited Marshfield, the
Mhm.
Pembroke one you can drive by. It's part of the way built now. Hingham, of course, is pretty stunning, but it's a incredibly big facility, yet is it's sort of on it looks like it's on the order of what we're going to be spending, which was pretty stunning to me. Um, you know, we're sneaking up on that amount, it seems to me. And so, anyways, um, that's what this is. You're absolutely right. You need to say we need to figure out what these things are in, what's in there. And I did not try to do that. All I tried to do is to say what are they looking at, and in public safety, and that's reasonably near the same term, and what's their size, and I got the architect and the builders also in there.
No, it's great information, so we can build off of that.
Good.
Thank you.
so I also have Ralph's, here as well. So there was some, crossover between the two.
Yes.
Marshfield's on both of them as well as Sutton. So Ralph, did you want to, impart any of your
Well, the only thing
takeaways?
I can give you, how did I come up with the communities? What I did is I actually looked at a previous large benchmark study that had been done, 10 or 15 years ago. So I took a look at what are the communities that professionals had suggested were similar to ours. So that's where those numbers came from. However, I added in ones that seemed to be close to ours that weren't necessarily in that study, but I was looking for communities of similar demographics. That is in terms of the population, the size of the number of square feet of roads, or number of roads or miles of roads and other things. So I tried to say, okay, what can we have a constant in here of some sort, which would be, year built, number of roads, population size. I did not put in demographics, which would include things like the wealth of the community or anything else. But anyway, I did some. I would do more. I don't think I've got a full list by any manner of means, but I do think that the problem is that we're not finding an awful lot that's as relevant as I'd like. In other words, you probably have to have something from 2023 on, and there aren't too many. So that's the other limitation of these kinds of studies. So you're not taking into account the inflation costs of these buildings, should they now be rebuilt in 2026, for example, or 2027. But nevertheless, it's a helpful start as I see it.
I wonder, it's hard to find like for likes in terms of timing, just because it's such a massive project and you're not going to always find, it takes place over multiple years and so forth. But Ralph, I wonder if like for some of these, we could even just put a multiplier on it of, we get an inflation rate and just,
Sure.
right size it for 2026. So
yeah, sure. Just put an inflation rate
Yeah.
on whatever number you think is correct. Yeah, sure.
But this was really helpful. I thought both these emails are great.
So,
I think
so
we
Ralph,
probably,
guess-
I would say we should do more. There may be others, and it just takes a lot of research. I guess it's an AI kind of search, much as Rob did to come up with this. There may be some others that ought to be included, perhaps some that Rob had done, and we could either use my form or his form to make a consistent kind of benchmark look.
So Ralph, I can share with the committee a list of projects that we pulled last year.
Okay.
That includes, I think, 80% of the projects that were completed for public safety, and then maybe we can narrow down which ones we think are more applicable to our benchmarking study.
Yeah, if you send that to me, I will then pull up the data associated with them as best I can to
Sure.
fit the model. Sure, absolutely.
I may
Happy to do it.
I may have put that in the folder already,
Yeah,
Susan.
that
I don't
sounds
know if you want to
good.
pull it up. Michelle, you can tell whether it's familiar or not.
Which one of these?
That one,
Kathy?
yeah.
Oh, yeah, that's so I saw that one before. That's so broad. I'd have to do
But
a lot
do
of.
you consider Brockton being accountable?
No, I
No.
think
Island
Michelle's
being,
just saying,
state police being a comparable?
No. I'm not saying these are just public safety projects that were completed.
I see.
they were
We'd have to, I have to
completed-
sort through that pretty carefully to make sure that we're actually getting comparables, that's
Mhm.
all. Yeah.
Michelle, were these completed in 2025 or?
The
Well, it
completion,
doesn't matter, they've been escalated to 2026 pricing.
they've been escalated, but you'll see the summer in 2015 all the way to 2025.
Mhm. Okay. Yeah.
Kathy, I know you said you guys haven't met. Do you know if any of the pricing's been received? Because I thought from our last meeting that you guys were supposed to get pricing from our
I
last
don't-
meeting to now.
I don't know.
Okay.
The AI stuff has the year that they, or the approximate years that they were either designed in or built. So that for some reason they didn't come out in the AI file that I had printed, but it's readily available.
Well, as Michelle said, this is really good information, but we have it in 3 formats right now, so, Michelle, does your group plan on moving forward with a benchmark study, or should we continue to work on normalizing this data into a single set?
So the last time we spoke to the OPM from the prior working group was to charge them. The select board asked for the benchmarking. They thought it would be helpful. So we just have to follow up with the OPM and see where he is with the benchmarking study. But I always think it's helpful to have our own data as well,
Okay.
so we can cross-reference.
Okay, great.
Great.
So who on the committee wants to spearhead continuing the effort? Is that you, Ralph, or?
Yeah, I'd be glad to do that, sure. Because I started it anyway. I'll do some more. I'll do as much as I can, right?
Okay, and
Yep.
all of these particular documents are in the meeting folder for this week if you're looking for them.
Yeah. Yep.
Okay, great.
One thing, Ralph, if you know this, apologies if I'm stating the obvious, but whenever I use ChatGPT for this kind of stuff, like ask or in my prompt put please provide your sources and then just click through the articles because sometimes it'll pull like it hallucinates and will pull information that's not accurate. So I always like to just go to the source material too and just make sure it's
I
accurate.
can, what I'd have to do, I think, Kathy, is probably put something in the below this and say, okay, here are the various sources. It's usually mass state sources of one kind or another is where they are. But occasionally I'm absolutely able to go into the towns, but where I can get into the towns themselves, I'll also reference that as well. Sure. But most of it comes from the state.
Okay, thank
And
you.
then everything else is sort of very specific, comes from the town if the town actually published anything. So,
Okay, great.
Yeah, quite a number of the OpenAI stuff references were town references from newspapers or the equivalent.
yeah, which AI program did you use?
Well, as I mentioned in my cover, OpenAI.
You use OpenAI. Has anyone
Yeah.
used Gemini?
I did not, but it's good. Gemini is very
Gemini
good.
is really terrific. Yeah, okay.
Yeah,
Yeah, okay.
but I was specific about the OpenAI because it is important to track down where you get the stuff.
Yeah, right.
And Susan, I don't know if you see that Chief Quigley has a statement.
I don't see him. One second.
I'm happy to read it if you'd like.
Oh, I see it. The OPM has cautioned us to throw out any numbers prior to 2020. Also, Hingham was 60 million at the end of the day. Situate was significantly higher too, and they have had to add outbuildings and more space for female locker rooms. So I think on your OpenAI, you had Hingham at 50. Yeah, I mean, I think that's just reflective of the fact that of what we're talking about. It's hard to get an absolute answer on everything because you get bits and pieces in different places. But so put it in as a range, I guess, for those types of circumstances.
Yeah, the problem we're facing with this is also different police facilities have different requirements. Not that they don't. Most police facilities have all the same needs, But in the case of ours, we've got, for example, a emergency management room, or there may be other conference rooms. In other words, there are differences, unfortunately, as a result of what's chosen to be in the police station. In our case, also, I think we have the IT building or IT function as well. So, when you start to look at it all, you say, okay, am I making an apples to apples comparison, or have I got apples and oranges
Right.
and kumquats? So
Mhm.
what have I got here? So
Right.
No, but one of the issues, Ralph, was that since the facility was built in '62, there's been quite a number of regulations that have come in, and we've been gigged on a bunch of those, and so presumably the other people have too. So presumably theirs are regulation compliant now,
yeah,
and so that's the main thing that I think that is important here. Who cares? If we choose to have a much bigger room than they have, then that's our choice, and shame on us, it seems to me.
okay, okay.
Okay, so I'm gonna close these and move on to, Linda sent the information about, I keep getting stuck. Second. Keep going back out to the beginning. Sorry, guys. I'm lost.
Maybe if you unshare your screen, it might be easier to like navigate.
Yeah,
There you go.
it's tough. Okay, of course I didn't put the bonding stuff in the same folder. Let me think where I put that, financial policies. Okay. Let me just get it out of my email. And I thought I put it in there, but I can't seem to.
What are you
find it.
looking
What are
for?
you looking for? Yeah.
I'm looking for the bonding stuff that,
Oh, okay.
Linda
I think I
sent
might have that.
for some reason. I thought I put it in the folder, but I can't seem to locate it, so.
See if I can find it.
There it is. Okay, so in Linda's cover note, she reminded us that that this is just for the $18,000 you know difference in debt service. Remember we had originally 10.6 and there's 6.2 available still on that bond, but we have not drawn on that bond for the 6.2 yet. Is that correct, Michelle? Yeah.
That is correct.
So, oh, Jesus.
Can you see my screen with the debt schedule?
Yeah. Yeah.
Okay.
Oh, you're sharing it? Good, because I'm making a mess over here. So she sent over a level service and also a declining schedule. I can't see it yet for some reason. I'm totally lost here. I have too many things open. 1 second.
But this assumes a $28 million price tag. Is that right, Michelle?
No. So this debt's, sorry, yes. So this is the additional $18 million needed, we would borrow. So we've been authorized to borrow the 10.2. Of that 10.2, we've used upwards of, I think, maybe 4. So we haven't issued the additional 6, and this would be for the 18 million more.
But we don't know how much we need if we don't have a price yet, right?
Oh, correct. This was just a
Okay.
hypothetical. Yep.
Okay.
Yeah, so yeah, this was to answer all of our question about what if we, what if we did not, make this a ballot item and we bonded, what would it mean in terms of the amount of debt, service that would have to be paid, annually and would actually be coming out of capital budget, which means we would require additional funding, in order to cover the bond. So, Michelle, are you still sharing or?
And stop.
No, you don't have to stop if you're still sharing. I'm just really just having trouble finding my proper way.
If I could just interrupt for a moment, Ralph, when you put together the summary,
Yeah.
remember the architect, I think, put together some a cost per square foot per year, put an accelerator on there. So that would be helpful to put in.
Okay.
Yep, so does anyone want to discuss it specifically? I mean, it's obviously,
Well, I think
significant.
for me, Susan, the issue is, what does it look like for the capital budget committee going forward? Let's assume that it's either
Right.
1 million or 1.25 or whatever, it's 1.28. I don't have it in front of me, so I'm only from memory here. Whichever of the two bonding scenarios we use, we still got about 1.2 million or $1 million, depending on how we bond it. That comes directly out of the capital budget committee. But then there was a note, I think, from you also, that was another 19 million has to be bonded as well. So you get another 1.2 or similar, or 1.1 there. So at some point or other, the capital budget committee has no money. Okay, that's what
Yeah.
that's what's coming down to. So you really have to ask yourself how, and also given the fact that we are going to be spent or needing money for just numerous projects, including the schools, which will be partly taken care of by the capital stabilization or by the stabilization funds, the special purpose ones, and other parts won't be. There'll be other equipment requirements. I mean, it really is a very it's almost an unworkable situation as it turns out now. Now, I'll give you one other perspective. I look back about 10 years to a previous time, and we actually did at that time, 10 years ago, cover what was then a declining balance for the schools. And we had, at that time, $2 million worth of bonding we were covering. But somehow or other, the money was more available than it is now. So it's a really odd situation where we were not able to save anything as we wrote those bonds off. We would have money in our capital stabilization funds, but now we're increasing back up to the old numbers, where in fact we don't really have any available money. So it's really coming down to a very difficult situation, unless the town is able to produce more money to put into the capital stabilization fund. So
What
probably-
is the other 19 million that she's bonding? Like, we should know what that is as the capital budget committee, right? But
yeah, I don't know.
is it like the roof of the Deer Hill School,
Well,
or
can't
the Osgood? Like what?
It shouldn't be, because those are covered by the special purpose capitalization stabilization
Yeah.
fund.
So
I don't know
what's
what
this
it is.
19 million?
Yeah, I know it.
Yeah. talking about in
I
your-
don't
in your
know what
email?
this 19 million is numbers coming from.
Wait a minute, you're talking about the cover memo in your email?
Yeah.
Yeah.
Yeah, let me see if I can,
Sorry, what email are we referring to?
the email from, well, it was from me, but I had copied what Linda had put in her email. So she said, as you consider the impact, please keep in mind, this is inclusive to the 18 million. However, we also have about 19 million in authorized and unissued debt.
I can speak to that. So I asked Linda last week to pull all the debt authorizations we had on the book from the beginning of time, that we've authorized at town meeting, because I wanted to get a good sense of what was out there, what has already been authorized that we just haven't issued. And we have to go through each project, because we may never issue that debt. It may have been projects that were authorized, but we decided not to move forward. So that $19 million could be nothing, could be $1 million. We have to go through each individual project to see if in fact any have merit.
Okay.
Okay,
Yeah.
that's good to hear.
So when do you think you'd be able to do that?
Um, how about by the next capital budget meeting?
Okay.
That's fair.
I need about a week.
All right. Well, we meet every other week, so you'll have a spare week.
Well,
Wow.
I want to give you time to look at it, so I'll have it done in a week.
Okay. All right. Okay. Thank you.
Was
That
there,
was,
do you remember, Michelle, was there anything on the list that jumped out at you? Like, oh my gosh, yes, we do
I
have
haven't
to.
even seen the list yet. She
Oh,
just
okay.
gave me the
Never mind
total
then.
figure. Yeah.
Okay.
I think I have seen that list somewhere along the line, but I wouldn't have any input as to what is
no,
valid.
but when Michelle goes over it, she will have that input, so that'll be helpful.
Yeah. All right, so just so everyone's on the same page, so this is 18 million of a new authorized borrowing to be combined with the balance of whatever will be funded under the 10-4, and that gets us to the 28.
The
So-
10-4 was a debt exclusion?
Yes.
Okay.
So
So
when we
that
really
would
look
not
at-
hit, that would not hit the capital budget.
And nor
The-
would be 18 million. It would all be excluded debt.
No, I think we were looking at what if this
What
18
if-
million was not excluded? What if we did not put it for a town vote and just had it hit the stabilization fund?
It does ultimately hit it anyway. The difference is only that it doesn't get increased each year by 2.5%, and it does end at the end of 20 years. So that's what that means. But it doesn't mean it does hit the capital stabilization fund.
What, the 18 million or the 10?
All of it. One way or the other, whether it's excluded debt or not, all debt except that which comes for the water department and sewer department does hit our capital stabilization fund. Always does. All borrowing does.
Right, if it's done as debt.
It's
I think
debt.
that's where you guys are getting confused a little bit, is if it's not done as a debt instrument, but it is done as a, well, maybe wait a minute.
If it's excluded debt, it's added to the tax levy.
Yeah,
So,
tax levy, right?
yeah. If you want to absorb the debt into the capital budget, that's a different story, but I don't see how a capital budget is going to absorb $1.2 million in debt.
Yeah, I think the exercise, Michelle, was to say, if this is something that we all know the town really needs to deal with, the fact that we're not compliant at our public safety buildings and we need to find a way to get there, and we're worried that it may not get through the ballot process, what would it look like? What was the other side look like? That's really what the exercise was about.
And is it an all or nothing? In terms of, could part of the 18 be debt exclusion and part be from capital stabilization?
It sure can.
Okay.
Someone should clarify for me, just because it's excluded debt does not mean it's excluded from the capital stabilization fund. We paid for the school, all that previous debt that we had written off was school debt, and that was all excluded debt. That came out of the capital stabilization fund.
Ralph, I think it's all in how it was structured. So town hall, for instance, that's coming out of capital budget, the way that was structured. That debt is going to come out of the capital budget. The public safety building is different. I don't think we'd structure that because that would essentially bankrupt capital budget, and we talk about deferred maintenance now. We wouldn't be able to maintain anything if we layered that entire amount into capital budget. But as Kathy said, maybe there's a portion of it that could go to capital budget and a portion be excluded.
Yeah.
The town would still vote on that though, right?
Yep. Yeah.
Again,
we're just trying to look under all
I'm
the-
very puzzled. I'm puzzled by all of this, that capital is capital. It doesn't matter whether it's excluded debt or other kinds of, or just straight debt. It doesn't matter. It's capital. So the question is, how does the town not take it out of a capital stabilization fund? Does it fund it on its own?
Mhm.
I
Yes.
have never seen that. No school has failed to be bonded and then come out of capital stabilization fund in all the years I've been on this committee. All of it, all borrowing. So unless the town takes it on for itself.
So Ralph, there was a borrowing, and I don't know the history, so you may. There was a borrowing years back for the school for $20 million.
Yeah.
That $20 million, are you saying came out of capital? Capital paid that debt payment?
Capital paid that debt payment. You can look at all of the payments starting way back in 15, 20 years ago, and you'll see that debt was actually assigned to the capital stabilization fund.
Interesting. Okay. So I'll do a deeper dive into that.
Yeah, because why not? Where else are you going to put it?
Okay. Sorry for all the homework, Michelle.
That's okay. We look at the budget daily, so it's a good time.
Okay. Any other comments, guys, or are we ready to move on? Do you know if facilities is coming?
Don't know. I see Brian
I don't
Joyce is
see anybody
here.
in here yet.
Brian Joyce is here. I don't know if he's representing facilities
Oh.
tonight.
Yeah, so facilities has news, no capital requests this year.
They have one.
Was that, so one has been, so which one is that?
The library doors.
Okay, so the library, if you've been by the library recently, the new pavilion is being, or the new pergola and patio and amphitheater type is being built out there. And the doors on that side of the building weren't part of the project, so there'll need to be some sort of access, from the building out there that's fitting for the purpose. I don't think there's any proposals or anything yet. It's just kind of a concept getting thrown around. Maybe Michelle, did you talk with Nick about that?
Yeah. So Nick was supposed to get an updated quote. He's been working with Bronwyn on it. I'm not sure if he has the updated quote or not.
So I talked to him earlier. They're still waiting on
Okay.
quotes and facts and
I
figures.
just don't want to lose sight of that one request that they have.
So that being said, we don't know the dollar figure or anything like that.
Okay, so you're saying there are exterior door that opens from the inside and locks on from the opposite side, kind of
Yep.
thing?
Probably be a
Safety
double
door.
door on the side that would go out into this new area.
Mhm. Okay. All right, we'll just have to get him back on when he has a quote, Michelle. Okay, well, I guess we can just move on to DPW since we got you, Brian.
Yeah. So I forwarded along last time we spoke regarding the tractor which had failed up at the RTF. It's kind of an urgent request, and that it's, I said before we would need to pull the trigger before town meeting, but as it's piece of property of enduring value over 10,000, longer than 18 months. You guys review it. We're looking at a used 2016 yard tractor for 25,000. The previous yard tractor, I believe we got about 30 years out of it. So it does have a long lifespan. It stays on site, doesn't go on roadways. It's used to, when containers fill, we want to pack containers as much as possible to reduce our hauling costs. Once they're full, we need to swap them out with the empties. And that's where this piece of equipment is important up there.
Mhm.
So we got there was a request to get kind of either a financing proposal or a lease to own. And I forwarded that. We received it last week. I wasn't crazy about the interest rates on it. I don't know if any of you took a
Yeah.
look at it, but so for 25,000 on a 3-year payment plan, we had a 10.8% interest rate with a monthly payment of $816 and 22 cents. And then option 2 was a 4-year. That's a 9.6 one interest rate with the monthly payment of $629.39. Each of those is anywhere from like $4,000 to $5,000 more by the time you're done paying it off over the 25,000. So that's kind of it. And I asked Linda today about, what if we just bonded this? And it's the value of the $25,000 value is just so low that it's really not bondable unless it gets lumped in with a bunch of other stuff. And we would probably be facing the same higher interest rates on this kind of lower value.
Yeah, Brian, thank you for getting it. I think we're looking more on the larger piece of equipment, the sweeper for financing, but yeah, for this one, I think we're highly overpaying for the asset for the $25,000 investment.
Yeah, and
I think originally what we were really trying to find out, and I guess you've already come to this conclusion, is that the other options really don't exist anymore, which was the party that you're renting from now can't fill the void. So
right.
yeah, you have to get a replacement.
Right, we're in that position now, and if we do force the Harris, who we're leasing the unit off of, to buy us another unit, then we're probably going to be paying this same, close to $600 to $700 a month rental cost. So in that case, I'd rather, pay it off in a couple of years or in 3 years rather than lease it, rent it in perpetuity.
Just a thought, Brian. We are going to have a bit of a surplus in the RTF fire insurance claim. Since this is directly related to the RTF, I'm wondering if we can't charge that expense to that line item. And maybe with the approval of capital budget, just not funding from capital budget.
Do we have
if that's an option?
25,000?
We will have a surplus of just about that. So it's just another way
game.
Yeah. So if capital believes there's a need and
yeah, and from a timing perspective, that would be available probably sooner than going through the capital process.
Yeah. So we can go through the capital process for approval and just fund it with a different source.
Yeah, I think so last time I mentioned, you guys vet what we're doing, and then we'd probably go to advisory or something to get the money right away, or this insurance money that Michelle's referencing. And then whether it's a payback by capital budget at town meeting or not, that's to be determined.
Does anybody have any thoughts on that other than Michelle and Brian? I mean, it's a pretty important piece of equipment to operate our RTF.
Well, this is a typical one you do, but what do you do with cash, one way or the other? At 25,000. Yeah, I don't. It could easily be the advisory board. They have what, $200,000. I don't know how much of that's been spent. It's a natural for them. And if Michelle, you've got 25,000, great, use that. I'd just say it's a cash item.
Okay.
Great.
You have to have this piece of equipment. There's no choice about it. So
that's right.
Yeah.
Okay then. Do we have to vote on that, Michelle?
I think you should vote to
Just recommend
approve
it?
the
Just vote to recommend it?
capital item because it does lay in your purview. But the funding mechanism could either be the reserve fund or the RTF insurance claim, therefore not depleting any of the capital funding that you're allocating to other projects.
Okay,
And if you're going to vote, if I guess I could frame it, it's for the purchase of a 2016 Ottawa Kalmar yard tractor, um, for the price of 25,000.
okay. Does anybody want to do a motion?
Motion to approve.
Second.
Okay, we vote.
Forrest.
Kathy Forrest, yes, okay.
No, I'm in favor.
Chris,
Yes.
we lose somebody?
Yes.
Oh, Rob, he's there. Sorry, Rob, I forget you're just words on the screen tonight. Ralph,
Yeah, our dormants are aye.
Susan Franklin, I. Okay, all right, Brian.
Great, thank you. And so just on I didn't know if you wanted to discuss the other capital requests we had. We had the 2 variable message boards for 20 grand, replacing the axle and hub for the number 3 truck for 15,000, and then the John Deere, replacing the 97 John Deere tractor for 75,000. And then the Pelican street sweeper, which is the big ticket. And I sent that financing options over to you before.
Yep. I think we're gonna, unless one of those items is a high priority like the yard tractor, we're probably gonna hear the balance of the requests and then start voting.
Okay, great, fair enough.
A quick one for me on the street sweeper. We're, according to what you've already said, I think, Brian, that we're spending about 51,000 a year is what if the number is right, roughly $51,000 a year to
Correct.
rent a street sweeper. That's what we do, right? And we use
Right.
our own wherever we can, but it's slow and inefficient and all that kind of stuff. I understand that. Unfortunately, when I looked at the numbers, and I'm not looking at them now, but I can from memory, we had like 339,000 or some number like that for
Yep.
a new Pelican sweeper. And it was going to cost us, I don't know, 71, 72, 78, I don't remember, in the 70s, it's probably 71,000 of cost per year for was it a 3-year lease? I'm afraid I can't remember exactly the numbers.
So yeah, we have so that it was, you were right on the money. The 339,008 is the price tag. The 3-year lease was at they're just about 5% interest rate. 3-year lease was 118,815.
Okay.
The 5-year lease to own was 74,728.
Okay. It struck me that what you'd want to do is, if in fact it is really needed and we'd benefit from it, you'd want to come up with a lease agreement that was out 10 years, for example, and get down below the 51,000. So at that point, it makes sense to do it. In other words, if it came down at 40,000 or 30,000 or some number like that, it would be a fairly easy decision for people to make. Because we're going to keep that piece of equipment for 25 years or more anyway, as we know. So it's worthwhile asking the question for a longer lease. Can't we get this down below the annual cost of actually going out and buying the service every spring? So that's the question. That's how I'd look at it.
Yeah, no, that's a good point. So I'll reach back out to All American Investment Group and see if they can go to 5 years and see what that looks like. I'll forward that along to Susan for
You mean 7 years? Because we have 5 right here.
7 or 10. Well, we know the value. Like, what would it take to get below the
Yeah.
51? Yeah.
Yeah, it might be 7. So yeah, ask them. Pose the question that way, but it might be 7 years.
Okay, great. We'll do 7 and 10.
Okay, great.
The only thing is, I don't want to dictate how I'd look at it. How others really feel about, whether we should look at it that way or not.
I think it's sensible.
Yeah, it's very sensible, yeah.
I mean, from a town as a whole standpoint, right? They're different budgets, but from the town as a whole, keeping it even makes sense.
Okay, just write that down. All right,
All right. Well, thank you, everyone.
Brian, thank you. And you can send that over as soon as you get it. That'd be
Okay.
perfect.
Awesome. Thanks. Good night, everyone.
Thank you. Good night.
Thank you.
So we did have IT on here to talk about the camera request, but I don't see anyone unless they're in a waiting room.
So unfortunately, Ron is out sick today.
Okay. So we'll
Super Bowl sickness.
What's that?
Super Bowl sickness.
It's impossible. Let's see. So that would be Chris Pratt would be up next. Is Chris here?
Chris is here.
Okay. I'll promote him.
Hi, everyone.
Hi, Chris. How are you?
Good. Can you hear me okay?
Yes.
Chris, are you really up there seeing a grandson or daughter of yours? Is that what your message was?
Not me.
No,
Okay.
that was our Chris.
All right.
Sorry, that's a different Chris.
All right. Gotcha.
I don't have any grandkids yet.
Well, that's what I was shocking to me to hear that.
Chris, are you going to
So,
share or do you want us to put it up on the screen?
yeah, I do have, let me see, I have this wide screen. All right, here we go. Let's see if I can. All right, can you see that?
Yes.
Yeah.
All right, so thanks for your time, everybody. And I know sort of gone through this before in bits and pieces, but I was asked to just give a brief update on the water department's long-term capital plan. So we don't have anything requested at this coming town meeting, but we will be beginning our planned borrowing for one project, the water main replacement on 3A, which is being done in conjunction with the large improvement project that's ongoing. So we will be beginning planned borrowing of 1.2 million for that project. And then if we can finalize the design and planning phase, we may begin our planned borrowing for the South Main Street water main. That is not quite definitive yet. That borrowing has already been authorized. So we worked with Linda a couple weeks ago to confirm what we will likely be borrowing in the beginning of fiscal 27. So that's just a brief update on what our planned short-term borrowing will be. But this presentation is more so on long-term. So just a few slides, and if anyone would like to jump in the middle, let me know. If not, we'll just go through this and then we can go over any questions or comments. Some of this may be familiar. I know I've sort of talked about it for a while now, but this is a little bit more detail, and we've put some illustrative projections together, which frame where we're at from a financial standpoint. Again, so this is just an overview of our long-term needs, cost drivers, and the risks, our projected sequencing, and then to tie it all together, how we're going to pay for it. So the current baseline of our system, it's operating, but it's constrained. We have aging infrastructure and aging plant and increasingly stringent regulations. We continue to be challenged by Lily Pond, which is a difficult raw water source to treat based on our current plant and regulations. The plant is nearing 50 years old, so it's really near its end of useful life and its practical capacity for what we need for the town. And then potentially selling water to surrounding towns in the future. Our sludge lagoons, our residuals handling area, has been a challenge for us for several years, and it's also very expensive to do what we're doing now with our residuals. So we'll talk more about the big investment we're making there. And then our Elms Meadow water source, which at one point provided 10% of our daily water, has been offline since 2021 due to PFAS levels. And then, of course, our distribution system requires constant reinvestment. We do have some pipes in the ground that go back to the 1800s, believe it or not. So that's a constant need for a high dollar investment. So the capital need drivers are the PFAS regulations and other drinking water quality regulations, our aging infrastructure and limited redundancy, and most importantly, the capacity to treat and produce water and modernizing all of our infrastructure. So there's basically four main parts of our capital program. The residuals management area, also known as the sludge lagoons behind the plant. That's going to be phase one of our long-term capital plan. The treatment plant replacement, which is basically one of our two options. We renovate and build onto the existing plant, or we replace. At this point, we're looking at replacing the treatment plant. And then adding filtration to the well field is really the only way to solve the PFAS problem there. So that would require another big investment if we chose to do that. And then our distribution system requires constant investments. So those are the four main focuses of our long-term plan. We're starting with the sludge lagoons as phase one because the existing lagoons are undersized and they're aging. There's no redundancy, so we kind of have no moves and no additional capacity when it comes to treating our residuals. It really limits our treatment output, and new lagoons will improve water quality. And most importantly, it's step one to the longer term, big picture treatment plant modernization initiative. So we're at phase one of our capital plan right now. The plans and design for the new sludge lagoons are at 60%. So we're working with Woodard and Curran for that design. We're at the phase now where we'll begin public notifications, regulatory notifications, and permitting, which we expect to be a very intensive process and time consuming. But Woodard and Curran, our design consultant, is helping us with that. This project, this part of phase one, will enable us to bring our plant into the modern day for water treatment. So very broadly, the capital requirements, we're going to rely on the Water Enterprise Fund's ability to borrow. We'll be looking at state revolving fund loans and grants. We'll definitely need to take advantage of some favorable financing products. Our retained earnings have been strong and will continue to be strong in the near future. We will be relying on our retained earnings to pay for some of these capital investments without having to borrow. And that is part of our future rate projections, which we'll go over in a bit. And then we expect the new debt to be phased as the products are ready and bills need to be paid. So very broadly, and these are broad numbers, but estimated for a planning level, the residuals area renovation, which design is underway, we expect that to be $7.5 million, which includes a contingency. The treatment plant replacement is expected to be $75 million. Elms Meadow filtration, if we choose to do it, is estimated approximately at $3 million. And distribution upgrades, which is actually quite low, but to keep the total number of debt in a reasonable range, we're only looking at about $2.5 million of distribution upgrade investment, which for what we need over the next 10, 15 years would be low. So here's a bit of a timeline, which kind of just indicates what we've done and what we're going to do or what we plan to do. Starting in 22, just as a snapshot, we cleaned and inspected both of our tanks. We did a system-wide leak survey and we continued to do upgrades and maintenance on our aging plant. In 23, we launched the initiative to develop our master plan. This is what led the foundation for our 20-year outlook. We replaced the water main on Beechwood Street, and again, we continued our plant maintenance and upgrades. In 24, we spent a long time just doing this long-term planning. We replaced one fleet vehicle and continued to update our plant. 25, we began the lagoon design. We began our hydraulic model for our distribution system. We completed the distribution loop in conjunction with the Cohasset Golf Course to create a loop by Cedar Street, the DPW. We replaced the water main on Short Street, and we completed our rate study. So looking at 26, which is our current year, our lagoon design is 60% complete. We're getting permitting and bidding. We plan to work on the Cohasset 3A water main replacement. We're evaluating and potentially replacing the water main on South Main Street in the spring, most likely. And we are doing some intensive planning on this treatment plant replacement. Moving on to calendar year of next year. So this is calendar year, not fiscal, but we plan to begin our lagoon construction. We have some planned water main replacements. We anticipate initiating a limnology study, which is basically a study of our current raw water and how to best treat it. We'll begin the design of our treatment plant, and we will continue to plan and evaluate the feasibility of adding filtration to Elms Meadow. In 28, we expect to complete construction on lagoons, more water main replacements, treatment plant design and permitting, and more design focused on the filtration at Elms Meadow. In 29, we'll continue with our plant design, permitting, and bidding, water main replacement, plant upgrades, which of course will be required even before construction of a new one. And if we choose to do filtration at Elms Meadow, this would be where we do the bidding and construction. In 2030, plant replacement, permitting, and pre-construction, water main replacements, plant upgrades and maintenance, and we do expect to replace one fleet vehicle in 2030. And then 31 to 36, very broad, high level, but we expect that would be the period of time which we begin construction on a new treatment plant. So that's a little bit of a snapshot of, I suppose, a 15 or so year period of the things that we think we'll be working on. So here's a little snapshot on the debt. Again,
Chris,
other
if I
than
can
this
interrupt for a
existing,
moment.
I'm sorry?
If I can interrupt for a moment,
Yes.
the water department used to have a hydraulic model that for the distribution system. I guess what you're saying is that was let go fallow, and you rebuilt it a couple of years ago. Is that right?
So yes, that's my understanding, is that their hydraulic model did exist. Water Current has that, and they're updating it.
All right. Okay, good. That's great. And do you know, so we really began the water distribution about in 94 or thereabouts, the rebuild of that distribution system. Do you have an idea of how much of our system we've rebuilt since that time? Because there's a big difference between the piping that you've put in at that time and going forward versus the old stuff, the really old stuff.
I don't know. I could look into how many dollars have been invested and then what linear feet we've done. But I know since that big push, where much of the system was rebuilt, it has not, just anecdotally, I do not believe it's been much of the system.
No, I got it. Yeah. Okay. All right. Go ahead. Thank you.
Okay. So the top part of this chart or this slide just shows our existing debt obligation. So this is debt service, not outstanding debt, but you can see it continues to roll off up until 2033. So the graph below shows what our projected debt may be based on the next slide. So you can see current debt rolls off, but we start to pick it back up pretty aggressively in 31, 32 to support these investments. So again, these numbers are largely just high level estimates for planning and illustration purposes, but it's a starting point for what range of rates and revenue and debt we likely need to be in. So if this is too small, just let me know.
Well,
But
the most important number on here is the rate increase number, which is quite interesting. And that's really been a plug number, I assume, that you used to so that you could pay for the debt.
so we are planning to present a new rate structure at the next town meeting.
Okay.
And it would likely follow a sequence like this for the next 5 years.
hmm
So just to orient everyone to this sheet, our fiscal 27 budget is 3.92 million, just in operating expenses. That was approximately 23% higher than last year's budget. But in last year's budget, we had to make some transfers from retained earnings mid-year. And we decided we'd rather increase the budget than have to continue to go back and request those mid-year transfers from retained earnings. We made some sizable increases in engineering, in extraordinary maintenance and operating maintenance. And we also have recently approved an out of a one-time adjustment to the contracted services with Woodard and Kern based on labor market changes. In other words, we needed to adjust the wages for some of the staff based on market conditions and retention. So there's a little bit of a jump there. So as you can see, in fiscal 28, we kept the operating budget largely the same because there was such a large jump from 26 to 27. So 28 and beyond, there's a 3% year-over-year increase. Just so everyone understands that math. Existing debt service is off our debt schedule. Future capital investment debt starts relatively low. Additional 50,000 in debt service fiscal 27, and then goes up from there. And you'll see in about 38, 39, and 40, that's when we're close to $5 million a year in annual debt service, which by rough calculations should support approximately 85 to $88 million of outstanding debt. So again, total expenses, operating and debt. This is just a line that's showing the projected annual debt service. So obviously it's going up and then lands just shy of 5 in 2040. So again, our rate increases, if we were to support this level of debt, this is just for illustrative purposes, there would potentially be an increase from fiscal 26 to 27 of 4%, another 4%, 4%, 4%, and then potentially a 6% rate increase in fiscal 31, which would be the 5th year of our 5-year rate term. And then these rate increases potentially stay around 6% until 36, and then start to come down 6, 5.5, 4.5, 4.4. So all these numbers can be toggled and played with, but this gives us our projected revenue. This 6.11 is from our budget for 27. And again, this just follows a 4% increase factor. So just based on the way revenue actually shakes out, it doesn't completely equal a 4% increase. So, if it's a 4% rate increase, we use a multiple of 0.35. So, we expect it to go up 3.5%, not necessarily a full 4. So in this case, it would be, 5.5% increase.
And
So
you're
that's our
basing
projected
that-
revenue based on these rate increases. And then again, we are relying on heavy retained earnings, transfers to retained earnings in these early years, so we can pay for as much as we can with retained earnings and not borrowing. And if we have the retained earnings, we'll lessen our borrowing amounts. And then you can see the retained earnings starts to dip quite a bit as we increase the debt. So in some years there is no retained earnings, or it's close to a zero balance. And this is just sort of for illustrative purposes. It's these numbers, nothing is necessarily set in stone, but I just wanted to put something together that was a little bit illustrative of what our projected revenue requirements would be. And this is using very basic 4% interest, 30-year bonds, very basic calculations.
So Chris, in this model, is there any growth in customer base or usage, or are you keeping that static?
It's relatively static.
So if we did end up selling water to nearby communities, that would have a significant impact on this model, or no?
If we could sell more water to surrounding communities, it likely could not be realized until we have a fully operating larger plant.
Okay.
So in the high demand summer months, it's challenging for us to supply the, certainly got to take care of the town first, and then the requirements of Hingham under a current agreement. Sometimes it does get challenging in the summer high demand months, and that's with our current plant. So likely we could not increase our wholesale water to surrounding communities until the plant is fully online and operational to add capacity.
Which was 2036?
That would probably, if this follows, it could be 2035, say.
Okay.
There's definitely some refinement on the timeline, because one option would be to just spread out this timeline, so these increases don't need to be as steep.
Did your engineering group give you any guidance on that?
Not necessarily.
Okay, because you were going to meet with them, I think, last Thursday. Is that right?
We did have a meeting. It wasn't necessarily on this topic, but we had some discussion.
All right. So this is very early on, and when you showed the prior kind of the outlined activities, the prior slide to this.
Yep.
It showed, I think you were still designing the facility in 2029, 2030 era.
Correct.
And so then you'd have to raise some money. You don't need to necessarily raise all the money, or if you did raise all the money, you would certainly be investing that money for some period of time and earning something on that invested money, it would seem. So more work needs to be done, is what I'm saying, as you look at this more finely. And have you had a chance? Probably not. There's a lot of activity that you're in the midst of in this thing, so probably haven't had a chance to kind of get any sense of what our market might be for this stuff. If Hull is really interested, or Rockland interested, is Hingham interested, how interested, and how about Situate. I mean, Situate for as I mean, you and I have talked briefly on it. It's I don't understand why they're building a new water treatment facility when they don't have any water. It's really blows me away.
Yeah, I can't answer that question, but I'm definitely interested in more discussion with Situate.
Yes. Okay, so it's still early on. We haven't done, it sounds like we haven't, really engaged in, we've thought a little bit, but not done a whole lot more of kind of digging into the possibility of the water, selling the water. Is that what you're saying?
Yeah, I mean, I think it's a great idea to explore. It's
Yeah.
definitely a long-term play. It has not been a point of emphasis of my
No.
work just yet. We need to get the lagoons built and paid for, and we need to advance the concept of a new plant. And as we do that, that's when we can incorporate the idea of additional capacity, which of course leads to more money to potentially treat it for other towns. So that's the conversation that we have to balance of, is the market there to sell the water? And is it worth our investment of, I don't know, pick any number. Is it worth our investment of additional 10, $20 million to make a larger plant?
So how much of it, of the, if you modify the debt chart that you had before, uh, which leads to this. If you just include the sludge modification and the sort of the um, that activity, which is staring you in the face, how much do you have an idea on how much the rates will have to go up and how much debt service is going to be involved in that and what that's going to look like?
If we only do the lagoons,
Yeah, because that's what you're really focusing on right now, is what you're saying. So if you just look at that, what is that project? What do those look like, is what I'm asking.
so if we have to start paying for that in 28, or maybe it's 29, you know, this is probably 300,000. Um,
Okay.
yeah, I guess, we could probably keep that. So, um, this would, these are the years we're talking about. So I think fully realized, fully constructed, financed lagoons at 7.5 million. I'd have to run the numbers a little bit, but it's probably around 400,000 in annual debt service. I mean, just
Okay.
rough. So if this is how that would translate. If we go up 4% over the next 3 years, and this is our revenue, we would have a surplus for retained earnings. If we want to say this is 3%, it carries over. So we can play with these rate increases and projected revenues. But I would say a safe bet is we need to plan on an additional 400,000 per year in debt service to pay the 7 to 8 million in lagoons.
But when do does the existing debt service drops down in 31 substantially?
Right.
So the question is really how to bridge that 3-year period.
Right. So if we do not add all this debt, I mean, if we're not adding $2 million that's a lot of debt. We're talking like $38 million worth of debt. So are we going to take on $38 million worth of debt in 2031? Maybe. So if you tweak any of these early rate increases and projected revenues, that's when the later years start to get iffy.
Yeah.
So
Well, I would say that talking this through with your engineering group would be, um, from their standpoint, they might have a feel for how to balance the borrowing with the uh, based on experience rather than based on just projection. Would that be perhaps that would be a helpful way to proceed on it to get a better feel for it
yeah,
going
no,
ahead?
definitely. Yeah, they say they have a finance team, which we've had one conversation with in the past. Is just a high level, introduction, but they're sort of at the ready when we want to bring them in to help us work through all this.
Well, they will have probably they deal, I don't know who else they deal with, but my guess is that they've probably dealt with a number of the other systems around and will be very good resources to draw on about what the need might be, who to talk to at these different local facilities that might want to buy water. And when you and I talked, it sounded like Hingham definitely wants to buy. They are buying more water than they're really supposed to be buying right now. So um, they're just out there, and typically we sell water to. We used to sell. I don't know anymore, but I assume we sell water to Situate most every summer, anyways. In emergencies, I don't know if it's a regular kind of thing like it is. It's probably not regular like it is in Hingham. And I
No,
don't know about Hull.
it's only water to Hingham. I mean, Situate.
Pardon me?
I don't have any knowledge of selling water to Situate.
Oh, okay. We used to sell emergency. They used to have an emergency every summer, so we sold to them fairly regularly, it seemed to me. But anyways, you know,
So selling water to towns other than Hingham or Situate, obviously the level of complexity goes up quite a bit because you get into these wheeling agreements and infrastructure upgrades and
yes.
obviously a slew of regulatory hurdles. So I think for sure the opportunity is out there, but it's complex and long term.
No, so sure, the obvious ones are the ones that abut directly that we already have water have pipe connections to for sure.
Yep.
So um anyways, it would be very interesting to find out what we can glean from the engineering group. That's all. Anyways,
Yes, I will definitely report back when I know more on that.
thank you.
And just to conclude for a visual, um, this is uh, this is a site plan of the current plant, which is right here. This is the intake structure. This is our maintenance garage. And then back here, kind of tucked in the woods, this is the pond right here. These are our two sludge lagoons. So just for reference, this is what we will be building. This is the plant, the maintenance garage, and this is the size and scale of our three new lagoons. So it's substantially larger and future-proofs it. So that's the scale of it. And then again, this is what we are, very rough conceptual rendering, but our existing site plan, this is the plant, intake structure, and garage, and our two lagoons. And conceptually, this is what a new plant would look like. So for reference, this is the existing plant. So the new plant would potentially be built basically behind it, in the parking garage and a little bit in the woods. So our maintenance garage goes away. We have a new intake structure, and then our three lagoons would be right here. So totally transforms the whole footprint of the plant. And it's a forward-looking 50-year life here. So that is all I have. Happy to answer any questions.
So Chris, I just have one question about, I think on one of the earlier slides, you were talking about some kinds of grants that may be available.
Yes.
On the first or second slide, could you elaborate a little bit on that?
I don't know any grants specifically. I just know that the federal government, the state government does offer um, certain grants and funding programs for municipalities to apply for. So we will have to, and that's where the Woodard and Kern finance team will definitely be helpful. Is they'll have to assist us with identifying and applying for all of the financing options that are out there. The some of them are low interest, but there's no silver bullet, and I think it would only be a small percentage of the amount we'll have to borrow. But again, I'd have to look into more specifically on what our options may be. And again, they are all application processes. So we have to apply, assemble all the documentation, and then apply on the timeline at which they accept applications and make decisions. So a little bit of some hoops to jump through on that, but we would pursue that when it's time.
Okay, great.
Chris, just more for information purposes, the Elms Meadow, like what are the deciding factors to like move forward with that or not? Is it kind of like a cost benefit because we have so much water already, or how do
Yeah,
you think about
it's a
that?
cost benefit. I mean, the town invested in that well field, so all of the infrastructure is there. Right now, it's just sitting idle. So I think just from a philosophical standpoint, do we want a town investment to not be used? And so there's that, just for the principle of it, should we get it back going? And secondly, is that the best use of $3 million the town could invest in? But on the flip side, at one point, it provided 10% of our daily water requirement, and it doesn't require the same water treatment. So you're getting 10% of the drinkable water at a much lower cost of production. So those are the three main factors in the consideration, because $3 million is $3 million. So do we want to add that filtration system to Elms Meadow? So yeah, it's more just a cost benefit and in
And that
conjunction with
system,
everything else.
is that system independent, Chris? Like it doesn't, you don't have to do anything different to the treatment facility? You're just adding something in the field?
Correct. The well water goes directly into the distribution system.
Okay.
Yeah, another issue which will be raised when this comes up, I'm sure, is to have very excellent water, other than it needs a little treatment, to not use it, in the past brought that issue forward. One of, if you have a resource that is a limited resource in our region, we happen to have a lot, but the region doesn't. Does it make sense to not to try to utilize it in some way? That was an issue many years ago. It may come up again. That's to be a fourth issue, Chris. That's all.
Yep.
Anyone else have any other comments or questions for Chris?
Yeah, just a quick one, Chris. It's Ralph. The reason we have to invest in some kind of filtration for the Elms Meadow well field is this PFAS. Is that correct?
That's
the pollutant? Okay. Have the regulations changed on that recently? I think I read recently that they may ease up on PFAS as whatever you can't exceed number. Is that wrong or right, or do you know?
I have not heard that it's lessening. I do know that there's a plan by the federal government sometime around 29 to 30 to make them more stringent.
More stringent. Okay.
Yeah.
Okay. And that's the only pollutant we need to worry about there, or are there others that need to be considered?
That is the primary issue there.
Okay. And do you know what the exceedance is at this point?
So it's very close to the limit. So we're sort of just hedging there because if we do turn it back online and that water is in the distribution system and during sampling it reads, over the limit, then we have to disclose it, and there's a whole series of steps that Mass DEP requires, and it doesn't seem like the risk is worth it at this point to turn that system back online because it is hovering close. I mean, it fluctuates. So we're constantly monitoring the PFAS levels from that well field, but it's too close to the limit to make turning it back online without doing anything different, logical, I guess you would say.
You probably remember, Chris, and probably Lee Jenkins has mentioned it many times. She believed that PFAS problem was the result of dumping in that Elms Meadow area, or maybe it was just stuff coming down the hillside. Was there ever any attempt to find out where did that pollution actually come from?
I don't know what's been done in the past. I know in the last 4 years, nothing. And I think PFAS is one of those head scratching issues over time. So it's hard to tell.
It's an emerging contaminant. So, I mean, and just to give you a level, so it's the exceedance level is 20 parts per trillion. So that's PPT. So, and to give you an idea, like when we chlorinate water, it's in parts per million. So we're talking about a million times smaller, a part per trillion versus a part per million. So it's only a very small amount can contaminate. And, PFAS is in cooking, nonstick cooking ware. It's sometimes in rain gear, a lot of firefighting clothing and things have PFOAs and PFAS. So there hasn't been any investigation on where exactly it's coming from, but the watershed is so big out there, it'd be very hard with all the homes on trying to pinpoint that with the small amount.
And it's in high concentration in the foam that's in the harbor as well, isn't it? So who knows where that's coming from?
Yeah, so I don't know about the foam and PFAS, that if that's been tested, but potentially.
Was your question, how does your question proceed, Ralph?
Well, for me, the question is I tend to think that we ought to use the well, to be perfectly honest with you. So I come with a bias that says if we've got it, we ought to use it. It's clean water, and to figure out how either to filter it and or find out the source, because it's an external source. It's certainly not in the water natively. There's no way. It's just as Brian said, it's it's a Teflon gear in your home, and the sources really are all modern sources of one kind or another that are leaking, on down the surface. I mean, they got to be coming from surface water flow. It's certainly not from, I believe, native well field flows. This is stuff that's, it's PFAS.
Yeah. PFAS is definitely man-made. The problem is they call them forever chemicals. So once they're kind of contaminated, it takes a long time for them to get rid of them.
They don't degrade.
So it's not like a stream of PFAS is to continuing to come in. It could just be an incident, and maybe in the ground out there.
Okay.
So, but so we're at 20 parts per trillion is where we are now. That the new promulgated clean water regulations are going to bring it down to 4. So, and so that's kind of what we need to get to in 2029 if things go the way they're going.
Okay.
Okay, well, Chris, thank you so much. It was a very thorough presentation. We appreciate your time.
Yes, anytime. Thanks, everybody.
Yeah, thank you.
Thank you.
Thank you.
Okay, so I've been trying to build the agenda for the next meeting as we're talking. Clearly, facilities on the library door, getting IT back in front of us, revisiting the comparative study, Ralph, that you're going to work a little
Yeah,
bit on,
yeah,
and
yeah.
certainly if you need assistance, reach out.
Okay.
We'll have Michelle come back in to talk about the $19 million of debt, historical debt, and how much of that really is still remaining. And also she was going to look into the excluded debt versus not excluded debt, and how that impacts the capital budget.
Okay.
Are there any other groups that we want to have come before us? Obviously sewer would be one of them. Or anybody feel they need to have anyone come back that was here previously? We've had fire and police back numerous times.
I don't think we need fire until we get Ralph's study done.
Yeah, okay. I'm gonna keep it to that then. All right, I couldn't remember whether I sent the minutes out or not, so I sent them again, the minutes from last meeting. So if I did send them out earlier, I apologize for sending them twice. And if I didn't, they're in your inbox now.
Susan, did you send it on email? I didn't receive any emails this week.
Really? I did.
And I just double checked I have it forwarding to my Gmail, but I just double checked in Outlook and I don't have anything there either. So just FYI, I don't know what happened.
Yeah.
I don't recall any either, so I don't think I
Really?
think you're right, Chris.
Okay.
Anybody get my email this week with the agenda and all of, no one got that?
I got it. I got it at both my email addresses.
Weird. I
You got
used
the agenda, but I didn't get any. I don't think I got any minutes, is what I'm saying.
I didn't get the agenda.
Oh,
Did you get them right now when I sent the minutes, Rob? Because I believe they're going to both of your email addresses.
Unless it's going to spam or something. No. On my Cohasset email, the last email I have is from Ralph on Saturday.
well, you sent one at 8:01, meeting February 9th.
Yeah, I don't
That
have
was
it.
3 minutes ago.
Yeah, that's just the minutes I just sent.
Yeah, you sent on Sunday the 8th at 11:30. I see it sent to Rob's Cohasset email address,
Okay.
Yeah,
Chris's Gmail,
Yeah.
Rob's.com address, Ralph's Gmail, Ralph's Cohasset, my Cohasset. I don't see Chrissy on here though.
Oh, okay.
Really?
I really
Sorry
don't.
about that, Chrissy, because
That's
I
okay.
have two addresses for you.
So no one else has an excuse, but Chrissy does.
I remembered there was a meeting, so.
Yeah, that's exactly what I show as well. Although I see Chrissy's name on it, actually in mine, that just came in.
Yeah, I'm looking at the one from Sunday.
Oh, okay. All right. The one that came in just a matter of minutes ago, I do have Chrissy's name on it, right?
Yeah, maybe I'm on like some delay or something. Okay.
Okay, so Chrissy, you don't have the minutes.
I looked them on the I found them on
Oh,
the
you found them on the
SharePoint, but I
okay.
did not see them.
Let me make a suggestion, if I may. I'm inclined to want to take a look at SharePoint, as I've said many times in the past, to get a better syntax out of it all. That we tend to accumulate large numbers of documents but they're not categorized in any way. I was thinking, for example, normally we would have, for example, everything associated with the schools would come under annual, that would come to capital budget meetings, annual meetings, fiscal year 27, and then you'd see schools, and then you would see everything associated with the schools. That does not exist there anymore. And many of those files are really, they exist, but they exist in a long string of files. I don't know if I want to tackle it all, but to some degree, I'd like to start to at least.
Well, they are there, Ralph. I just think,
yeah,
they're under the fiscal year. So if you go to, I think it's annual records first, and then you open the folder that says capital budget FY 2027.
Yeah.
Then you're going to see IT, harbor, everybody under there.
Well, just go down to schools and see what you see.
Well, the schools, if you remember, they did their own presentation. They had everything in Google Docs. So if you go back to the meeting that we had the schools at, which I think was the 12th, I have their link to their materials.
Yeah,
They
I've got
did
that
not
too.
put them in. They did not directly put them in the.
Yeah. So I would say is that as you look down through everything under capital budget committee, and you'll see lots and lots of files which are not categorized into anything. They really, really need to be done so that when you're searching for something, you say, okay, I'm looking at capital budget records. I'm looking at the annual meetings. I'm looking at fiscal 27. Then I'm looking at the individual departments, and I find everything I need within the department, if in fact it belongs in that department, rather than in a long, broad list, which is the way it is now. So I'm trying to say we got to simplify the way we get at the documents in the old structure that we used to have.
Yeah, I can talk to Michelle about improving it. I think we kind of abuse, well, not abuse, but we don't utilize the capacity of the system because technically every document should really only be in the system once. And then you just you create links to that document in other places. So you're not ending up with like 50 or 60 versions of a single document in the system, which is kind of the way we've always done it in the past. I've been trying not to do that. I've been trying to do in our meeting folders, give you either documents or links to documents that exist elsewhere. But I can talk to Michelle about trying to improve it. I also have some of the old files I can't even get to anymore because remember they changed our emails. So my new email doesn't have access to some of the old files.
Yeah. But we do need a better way to get at things so as to make it simpler for everyone, particularly people new to the committee, is to say, where do you find these things without having to search through 10, 15, 20, or 30 different documents. Yeah. It's just too hard.
Well, that's why I've been trying to do the meeting folders.
I know
try to make it easier.
I know it just makes it hard on you, though, to actually have to keep track of what we've got and what we don't have and everything else. So
yeah,
anyway, we need a structure that works.
Yep. Okay.
So what's the action on that?
I'm gonna have a conversation with Michelle about improving it. The good news is Michelle does have a resource that she didn't have before. That's someone who's assisting her, who's very technically proficient. So I can chat with Michelle about getting her to help us out.
Okay.
Okay, so back to the minutes. Were people able to look at the minutes or in order to vote on them, or?
I have to look now.
You can take a couple minutes to get them.
Without getting into all the details of this, all the narrative, most of it, because there are no votes here, most of it is pretty good. So when there are votes, you get much more specific about whether we've got the votes right. In this case, it's mostly narrative. So
yeah. Okay, so then we have a motion to move the minutes.
Motion to move the minutes, to approve the minutes.
To approve.
Second.
All right.
Aye, Rob Casemeyer.
Aye, Kathy Forrest.
Chris Peisch, aye.
Chrissy Francona, aye.
Ardo Mitsurai.
Susan Franklin, aye. Okay. Okay, then I guess that's it for tonight, except for determining the next meeting. Which calendar wise, oh, we're on the 9th here. Oh, well, the 16th is President's Day anyways. So town hall's probably not open, so the 23rd.
Works for me.
Okay.
With me.
Works for me.
All right then. Put together an agenda. I'll fix my email problem. And we'll see you all on the 23rd.
So like a motion to adjourn?
Yes. Can we have a motion to adjourn?
Motion to adjourn.
Second?
Okay.
Aye.
Freddie and I.
Aye.
Raise an eye.
Aye.
Aye.
Chris Peisch, aye.
Chris, I'm glad you clarified it was your granddaughter. Yeah. Do we get to see a picture or what's the deal here?
No, I don't want to bore you all with it, but it's a lot of fun. I'm just finding it a lot of fun.
Good. That's good.
Congratulations.
Thank you.
Let's just finish the vote here. Rob?
What's that?
Rob, did you?
Yes,
give
I
your
did. I voted
minutes?
early.
Ralph?
Aye.
Oh, Chrissy, I voted as well. Chrissy Franklin,
Yeah,
aye.
I heard Chrissy.
Okay.
Ralph?
I'm going to vote no. I don't want to end the meeting. I'm just kidding.
Okay. All right then, guys. We'll see you on the 23rd.
Okay.
And Chrissy, I know I owe you a little bit of time. I'm sorry about my schedule.
Yeah,
This
no worries.
Last week has been crazy, but I will figure out a good time.
Okay.
And get
Thank you. I appreciate it.
All right,
Thank you.
everyone. Have a
Okay.
good night.
Thanks. Have a good night.
Good night.